Hey everybody, welcome to Trading Capital. I'm your head market analyst here, Curtis Scouten, on this June 28th. What a bloodbath on Wall Street again. Tremendous sell pressure. You can't really call it a broad market sell-off because energy was the strong sector of the day. Obviously, oil was the big lifter and natural gas in terms of energies moving higher on the day. But believe it or not, despite energies being strong for now, we're still in the thesis that energies will move down. They will eventually join all markets negative on the year, and that's why we accumulated a short, which we'll discuss later in this video. But overall, we're going to go over the S&P 500. We're going to go over oil, gold. We'll touch on Bitcoin, the real estate sector again, and we'll also touch base on healthcare. And congratulations on some of the trades that we did today. It was an epic day. This is the reason why we are net short the market, because days like this tend to happen. When you have a massive rally, the bear market that we're in tends to see these nasty drawdowns and reversals. But brilliant price action. We managed to pull 3 of our long positions off the table today before the selling commenced. So we banked a nice 7.8% on Qualcomm. They had a big news announcement that they're still going to continue to be one of Apple's main suppliers. We also sold our Mosaic short for a beautiful double-digit 12.65% gain, so congrats on that winner. And then we also sold our ISRG, and this was at the around 10 a.m. where I noticed the markets were kind of in trouble, and I wanted to pull another long off of the table, but yet accumulate some shorts. So we banked 8.79%. And then we also entered some new trades today. We shorted IYR again. Notice a couple weeks ago we brilliantly made, I believe, over 15-16% on that trade. We also are shorting and accumulating yet again Valero, which is the energy play, because we just banked a beautiful profit on that. Oh, and the big winner of the day, we covered our flying vehicle short. Who would have thought that trade would work out? It's not like we're in a bear market. It's not like speculative investments can go lower. But Archer Aviation banked 20%. We've rinsed and repeated that trade now 4 times over the last 2-month period. And it's truly been a very profitable trade, because ultimately, despite the company having a strong balance sheet, when you actually break it down and look at it, not much debt, to bring a product of their magnitude to the masses where it's really going to make a difference in terms of their valuation is pretty darn unlikely in this current market environment. Maybe in 5, 10, 20 years, maybe when we first focus on electric vehicles, but certainly not flying vehicles. We also added to our SCO short, and then we did accumulate a little bit more in our PayPal position and Zoom. So let's just discuss the S&P 500. So now we have the tone of the video that's been set. So jumping onto the 10-minute chart here of the S&P. So notice this is where pre-market was trading. We had this little gap up in pre-market, sell off, a little bit of a rally up, and then when markets opened, I think it was just due to the light volume nature, markets had this massive surge, and then I was watching this breakout line over here because we needed a confirmation candle, and we failed to get that confirmation candle, and then you started rolling over. And honestly, the signal that I got in the markets when it was rolling over, and why we started pulling on more shorts throughout the day, and we're actually in the money substantially on a couple of them, like IBM and things like that, but was when you tried rallying up back here, you got the retrace back to the top of this resistance trend line, and you pulled off substantially, and then you got that confirmation candle that we were off to the races for downside price action. Did I think we were going to sell off this much? No, I honestly thought we were going to stay more in this 386 range and find support there, but clearly that was not the case. Ultimately now, I think all the markets are forecasting that it has to go down to this gap fill. And what the interesting thing is, in our previous videos, we talked about that in the sense that now that you have 2 gaps to the downside, it's very likely that the price action is going to be pulled down to the downside. And that's certainly what we saw today. And ultimately, I do think you come fill this gap, and there is the potential that you bounce, because this would be the retrace back to the original breakout zone. So notice how this gap and this, let me just adjust this trend line over here from pivots to pivots, it's kind of confluencing in the same zone where both of the technical signals meet. So that does open up the probabilities a bit higher that you do get a retrace down potentially tomorrow, and then perhaps we can get a reversal. So that's kind of the scenario that I'm looking out for. Obviously, you do have this secondary gap fill down here, but it would be pretty hard if the markets have a sell-off and just go directly through that without some sort of a minor retracement of this full down move. So we'll just have to monitor that price action. If we flip to the NASDAQ QQQ, the QQQ, let's just let this chart load. QQQ has had a nasty sell-off as well, down over 3% on the day. You can see the QQQ filled its gap over here beautifully, but it could not hold that gap. So if we flip to the daily chart, let's just see what's going on with the Qs. So the Qs, again, nasty vertical sell-off. You did fill that daily gap. There is a secondary gap fill down here, which you could likely move down into, but ultimately you want to hold this down sloping parallel channel. That's where you're going to have some major support, so there is the potential that you flush down to say the 281, 280 level tomorrow, but you do want to hold this channel. If you break this channel, you do have a sharp move down to this gap fill, and then obviously the double bottom zone. So that's kind of what we're watching out for. If we take a look at the USO chart, let me just flip on the daily chart for us. Notice how we've had a nice substantial move off the lows. You have come into more or less that 50% retracement, just getting stuck under this wide range red bar. So you're kind of in the middle of this bar, and it's going to be difficult to chew through this volume, considering that you've had pretty substantial light volume days, and you are under the short-term moving average now. So this is why we picked up a little bit of SCO today. Notice how we picked up SCO. Pretty much we let it pierce this gap fill, we let it hit the short-term moving average, and in my opinion the SCO chart is actually, if you monitor just the SCO, it is a little bit slightly bullish because you are holding this bullish formation here, and you got the retrace to the gap fill. You're still inside this impulse surge move, so as long as you hold this, the SCO still has a substantial way to break, and obviously that means oil is heading lower. Just looking at the WTI chart, look at that beautiful retrace. 50% retrace, pretty much almost the center point of this channel. My channel can be off a little bit. You could adjust accordingly to make it fit, but beautiful 3-bar surge. None of the previous volume days were able to take out this substantial volume, so that's obviously a short-term signal that there's not as many buyers that are willing to prop up this price. Now, we're just starting small with our energy shorts because there's obviously always a scenario where it could go higher, it could float to the top of this channel, but we are well positioned, very small amounts, and will continue to accumulate as the economic conditions deteriorate. And if energy keeps going up, that's fine by me, because honestly that correction will bring it down. So right now I'm still in the camp that energy XLE is still the only sector positive on the year, and mark my words, a bear market, which is arguably what we're in, some people will still deny that, but a bear market gets all sectors at some point in time, and I think it'll be this year in 2022. If we take a look at, and there's various reasons for that, just the main one is slowing economic global conditions. But if you look at what we're also shorting now, look at this beautiful short trade, IYR. So we played this short trade down for this move over here, and then we covered in and around this area. It's had a nice bounce, a 1, 2, 3, 4, 5 day bounce with a little bit of a doji candle stuck under that short-term moving average. So right away you knew there was resistance there. You filled a key gap. You do have a secondary gap up here on the 100 level, which always means that there is the potential for it to float up. But again, we've started small. We're already in the money substantially because IYR had a beautiful reversal. So we issued the short around this 94.86 level, and you can see this nice reversal candle right off that level early in the morning that we gave out. So congrats if anyone took that trade with me. It's always good to see when we execute a short that it bounces off that level completely and very quickly. We also shorted our VLO, so let's just discuss that before we move on to gold and metals. So Valero again has had a power move. It was up on the day, I believe 5 or 6%. We didn't get the exact high of the day, but we're starting to accumulate a short in a really good position here at 117. Again, you have a key gap fill up here. Does coincide with your short-term moving average. That would be a significant retrace, probably around a 618 retrace of this full down sloping move, which could coincide with the measured move of this pattern. So again, it's a small position we're starting, but we will accumulate the shorts as we go on these names for yet again the next downturn in the markets. And these markets will get another downturn, a sharp downturn, one that catches a lot of people off guard, in my opinion. But there's still the potential that we're still holding this bullish pattern that could move a little bit higher. So we're just going to accumulate and slowly accumulate has been the name of the game for 2022, which is why we're up over 25% on the year. So it's something to be proud of. We did also add to our PayPal. So let me just search PayPal here. So if we take a look at PayPal, a nasty sell-off. We are out of the money on PayPal, but PayPal is one of those names that it's going to require a market to bounce in order for us to potentially profit on our trade. But again, PayPal came down at hard sell, down over 5.43% on the day. If you flip to the intraday chart, you can see why I added here. You have this basically this upsloping trend line, and now you did get a little bit of an hourly bottoming tail formed on PayPal, and it's still technically intact because even though you've had a down day over here or a down hourly candle over here, it's still within the wick of this hourly candle. Now there is an intraday gap fill here on PayPal around 71.22, so that's always a possible chance that you can go down and fill that. I believe gaps are meant to be technically filled, so that's certainly what the probabilities display. But we'll just have to monitor PayPal. I'm fine with our average. It's at a great valuation. I mean, the fact that we have PayPal just accumulating a small position below the COVID low just shows you how oversold this name is. And I mean, we haven't even had a big fund potentially announce a deal with them or some sort of accumulation plan, but inevitably a company like PayPal will bounce back over time, but it's going to rely on a market trade. Another trade I'm pretty proud of, IBM. Wait till I show you IBM. Things like this just get me so excited. Let's flip to the daily. Look at this beautiful topping tail. You came into resistance, failed to basically close above that on a daily basis today, and we shorted it over here around the 142.78, and you've pulled off substantially. Now, one of the reasons why I shorted this isn't just simply because there's a doji topping tail here and you're running into this micro double top pattern, but if you look at the technical signals, so over here you have a major resistance in February, a major resistance point over here in June, you hit it over there, and you hit it over here. So you have major resistance in that area. You do have a beautiful daily topping tail in effect over here. You also have a on the larger time frame. So if we flip to the monthly is what really gets me excited. This is a picture perfect double top. You have a double top going all the way back to February 2013 with this resistance line, with a beautiful 4-month surge to the upside. You are most likely going to pull back. Double tops are a beautiful shorting pattern, especially when it's a longer resistance points, and this certainly is a long resistance point coming up on 12 years over here. So essentially this should prove to be a beautiful area that we can accumulate, at least starting to accumulate a short. And the wonderful thing about this is that you actually got that pierce earlier in the week, which tends to suck in a lot of investors and retail money because it thinks that, oh, IBM is going to break out. Well, not many charts are trading at their 52-week highs, and I'm a big proponent. If you study the charts back in bear markets, and bear markets aren't 3 to 6 months, they're often 16 to 24 months at the minimum, sometimes years. So they eventually, and understanding what a bear market means is it essentially means global growth is just grinding to a halt, where earnings of these companies are being shattered, and when you have the backdrop of inflation eating into these companies' profits, there's just so many catalysts to this market, and understanding that every company will eventually be affected by the domino theory, because it starts with the largest companies doing layoffs, cutting supplies, cutting growth, cutting projections, cutting R&D, and it just slowly trickles down all the way to from the mega caps to the large caps to the mid caps to the small caps to the micro caps and so on and so forth. And the economy is so interconnected that you can't it's very difficult to be the standalone outperforming company when all the other companies are performing. So despite IBM being up on the year, I do think it has a sharp pullback in its near term future just due to the technical factors, the overall economic health, and so on and so forth. Let me just go over what else we did today. So we'll touch base on gold. Gold again, not much to report on gold. Gold, you're still stuck. Let's just flip to the daily chart here. Gold, you're still stuck in this wedge formation. You're still holding in the series of higher lows. And it's kind of impressive because if you simply look at the DXY, the dollar was actually strong today, which makes sense as a falling stock market. People are selling, looking for those dollars, moving to cash. So the dollar was strong today, up over just over 0.5%. And gold was down, but it didn't sell off drastically as it typically does. So the fact that gold is still holding against a strong dollar is pretty impressive for now, and you have to respect that. If we look at the US10 year, let's just take a look at the US10 year bonds. Again, it was a down day on the yields today, just down 0.5%, so pretty much mimicking what the opposite of what the US dollar did. But you can see we are kind of putting in this, it's still in a major uptrend. You're above your key short-term moving average. But I like to look at the weekly chart on yields. It gives us more of a signal. Right now, there's not much to make out of it. It kind of has a 50-50 shot of continuing to go higher. And then, obviously, your first support levels at this 2.75 mark. I'm in the camp that you do see this pattern continue to flounder sideways to lower choppy price action, where you'll find support on this blue trend line. And then eventually, once you find support, I do think it can continue to move up and potentially, continue to rally throughout the rest of the year. And now the big thing that I'm watching for is if we fail at taking out this double top. So say we flounder for several weeks and then we come up and test this double top zone. If we fail to take out this double top, and then as yields start to fall and gold falls, this is just a little scenario, but if we fail to take out this double top a few weeks down the road, and if gold is selling off, that's our signal something's brewing in the liquidity markets, the credit markets, and I will certainly move a lot more defensive very quickly. So there's going to be lots of things to pay attention to as we head into July with economic GDP numbers, recessions, the Fed FOMC meeting. There's lots and lots of things that can certainly push or pull this market in any direction. So we're going to have to be on point. Things will move very quickly. Let's just take a look at natural gas. Natural gas did get a little bit of a bounce today. So beautiful job still covering that natural gas short right down along those lows. So ultimately, where I'm looking to potentially start accumulating yet again another short is right over here, a retrace back to that original support zone, which will just be a pierce of, around 715, 720-ish, give or take a few. So that's kind of the level that I'm willing and comfortable to start accumulating a short position. I'm actually rooting for natural gas to get up here. I was hoping that it would go down a little bit more so that we could play the long side, but we don't get the chart setups all the time that we want. But ultimately, the next thing will be to short natural gas if it starts getting into this area and then a little bit higher and so on and so forth. But I don't think you're going to be taking out these cycle highs for quite some time. That's it for today. I think we've covered enough. Brilliant job. It was an epic call on the healthcare stocks too. I mean, simply looking at the XLV, it was down 1.74% today, and that's like the beautiful thing about shorting BMY. We added to our short yesterday. We also shorted Eli Lilly. Magnificent, job doing that, because this XLV was calling for a nice sharp pullback, and that's certainly what we got in healthcare stocks. So it's beautiful that a lot of our short positions are already in the money. If we could just get Netflix to perform for us, that's our one long that has really been frustrating because it's been stuck in this choppy range. Basically I'm hopeful that it breaks out of 200, but again, hope is not a way to trade. We're still into amazing valuations. We're still into amazing technical support levels on a monthly basis. You are defending that beautiful monthly bottoming tail. Let me just pull it up so that we can get a quick analysis on it. It's always easier to show you on the charts, but clearly a massive down day, which is unfortunate because it is our biggest long position right now. So Netflix was down basically 5% on the day, but if you look at the monthly chart, what I am impressed about is Netflix has had this monthly bottoming tail, which is beautiful to see. And you did come down at the lows of the month to test it, but you held it. You held it very, very impressively. So let me just remove that. So as long as we have 2 more days left in this month, I really want to see Netflix hold this monthly bottoming tail. If Netflix holds this monthly bottoming tail over here, there's a strong probability that we get I think a quick rally in the early months of July to move on Netflix and move up. And honestly, it's still technically oversold. It's making a series of higher lows as long as this monthly candle closes here or higher. And we are into good support zones. You can see how you've shedded through the 2020 low, the 2019 low, the 2018 low, December 2017 low. So Netflix has just been shattered. And but I'm hoping that we can essentially get some quick profits in Netflix maybe over the next 2 to 3 weeks. Before I would like to get out before the earnings call. But honestly, with Netflix past 2 earnings, they've literally thrown the baby out with the bathwater. You had this earnings decline over here, and you had this earnings decline over here. So another thing I'm really watching on Netflix is their insider buying. I haven't really seen anything yet, but I will be certainly paying attention to that if that occurs. That's it for today's video. Great job being net short today. Great job on the profits. We've continued to bank profits this week. It's truly incredible, just the power of being able to swing trade and being nimble in the markets, not being tied to any one specific outcome, and just trusting the charts. I mean, they have guided us to some tremendous profits this year, and it's truly something to be proud of, because when you look at and you talk to, multi-billion-dollar hedge funds, they are still getting thrashed. And honestly, I don't see that pain stopping at least until the end of 2022. And if you're expecting gains into 2023, that's maybe being a little bit optimistic in terms of these hedge funds. But for us, we just get in, get out at technical levels, and that's been the best bet in 2022 thus far, because we are making money in a bear market, and this is the toughest environment. So if you are positive on the year, and certainly if you've been taking our trade recommendations, you would be, it's something truly to be proud of. So congrats, guys.